I'll just kind of explain a little bit about why I'm here, why I'm doing this. So I have a background, I'm not a tax person, I have a background in e-commerce. I was involved in a couple of dot-com startups and then spent 11 years working at Amazon. So during that time I was in like business development, sales, helping grow Amazon's marketplace, helping launch Amazon's Fulfillment by Amazon channel, Amazon's product ads, and checkout for merchants. So all these services over the years helped Amazon sellers become global sellers quite quickly overnight. But one of the things that was pretty consistent was the fact that these sellers had no assistance with tax compliance. So they could sell in every country, they had an audience, they had logistics, but there was no way of them being compliant. And that's really why I came to Avalara, and that's what Avalara does. So Avalara is a tax technology company. We have a range of solutions that can help companies be compliant with tax globally. So we can help them calculate the right rates of tax in their checkouts, in their ERP, in their accounting packages. We can help them file tax returns in whichever country. We can help them just be compliant generally. There is about 500 or so platforms that we integrate to. So, as I said, mainly e-commerce, ERP, point of sale, wherever a transaction takes place. We calculate tax in over 193 countries, and we have offices in about 15 countries with about 1,500 employees. So that gives you a bit of a background on us, on who we are, what we do. And I'm not going to spend too long on this, but the kind of companies who are using technology to automate their tax compliance, it varies. You've got the likes of BP, Shell, Coca-Cola, who have some vast tax requirements globally. They're using software right down to Amazon sellers and everyone in between. So some names that I'm sure you'll be familiar with there. So I'm just going to talk you through. I'm not going to go through the list of things. We'll just quickly whiz through. But what I want to do is just take you on a little journey, really, about some of the things to take into account when you're expanding globally, going into new markets, and just make sure that you're aware of some of these. Some of them will be relevant to you, some of them may not, but it's going to be useful anyway. Digital services. You may or may not know that if you sell digital services to B2C customers, that if you're selling to them in Europe, you have to make sure you're charging the right level of VAT, depending on where that customer is. Same with Norway, Iceland, India and Russia as well. They've also developed that regime. There's a few other countries, South Africa to Switzerland in that list, who've got thresholds. So you need to have sold that amount of goods or digital services into those countries before you qualify. But the bottom three, there's actually no threshold. So once you start selling a digital service to a customer in South Korea, for example, you need to register for VAT there and start filing. EU VAT. This is probably something that's probably a bit more relevant to you guys here in the room. So distance selling thresholds. So you'll be aware that when you sell goods to customers across Europe, that once you sell over a certain threshold of goods, you need to register for VAT in that country and file in that country. So there's a couple of thresholds, really. There's 35,000 euros, which is most countries. And there's a few like Germany and the Netherlands and Luxembourg where it's 100,000 euros. Australia, if you're shipping goods to Australian customers, they've removed their low value threshold. It used to be 1,000 Australian dollars. Now, if the customer's not going to be the importer of record, then as a retailer, you also need to consider registering for GST in that country as well. India is a beast. And pretty complex. They've introduced a new GST system, goods and services tax, which requires companies to provide their transaction level data to the government, and then they reconcile that against other retailers to make sure that those numbers match up. So it's a very different system to what we have here. It's a huge reporting burden, but something to consider if you're thinking of going into India. And then marketplaces, again, probably something which is quite relevant to you guys, is it's becoming increasingly the onus on marketplaces is becoming increasingly tight. They're being forced to divulge details of their sellers, which which is not great if you're a seller and you potentially have some tax obligations. But in Massachusetts, for example, in the US, they've issued a summons to Amazon.com to provide details of all the sellers who've sold any goods in Massachusetts. And I think Amazon has a couple of weeks to give that information over. I don't know what they're going to do about it, but if they do give that information, I think it's only a matter of time before other states follow suit as well. Spain, Italy, Czech Republic, Poland, there's some compliance requirements in these countries. So, you might be familiar with filing VAT returns. Well, in some of these other countries, there's different filing requirements. So in Spain, once you reach 6 million euros in sales, you need to provide sales data to the government, which the government can then use along with their returns to then check transaction level detail. So this is all really a kind of a movement that we're seeing in a lot of countries where governments are really wanting to see more data. They want transaction level data, they want to verify it, they want to make sure that they're getting hold of their VAT and sales tax and GST quicker than they were before, and making it more onerous on retailers to provide that information. GCC, so the Gulf Cooperation Council, they're introducing a new VAT regime. I think it's starting in January. Saudi Arabia and the UAE will be the first 2 countries to launch, and the other 4 will be following. So again, if you're trading in those countries today, it's something to think about. That's going to be a new way of working. Brazil is a beast as well. That is, if you sell something to a customer, you have to, before you issue an invoice, you have to send a piece of information to the government. You then have to get a digital seal, which you then put on your invoice. I mean, it's just incredibly complex. And they're also introducing a new VAT regime as well. And then the other B word, Brexit. I mean, God knows what's going to happen once we leave the European Union, if we leave the European Union, but things are going to change. Distance selling thresholds will change. Intra-community supplies will change. There'll be new, potentially, customs and import duties, and it also depends on the different, deals that we manage to negotiate with other countries. So tax is going to be a very different world in 2021, or whenever it is that we leave, once we have that 2-year transition period. So I'm just going to, we could spend a day focusing on any one of those, and I'm just going to focus on one area, which I think is probably going to be the most relevant to some of you in here. So US sales tax. So a little bit of info on it. What is it? It's not across the US. Sales tax only works in 45 states at the moment. 5 states don't have a sales tax regime. And there's actually, when you break it down, I mean, in Europe, it's fairly straightforward. Each country has its own VAT setup. In the US, you've got the state level of tax. You've got the county, you've got the city, you've got special levels of tax. 12,000 different jurisdictions who all can decide to tax things differently and treat things differently. VAT, how that works is you apply a level of tax at each level of the supply chain. So from manufacturer to sale. Whenever value is added, VAT is applied and provided to the government, and there's a reverse charge system to kind of recoup that back. In the US, it's slightly different. So the sales tax is applied right at the end of the process, so at the final sale. And that's how sales tax differs to VAT. If you are in the US, the thing to think about is where you have obligations. And it's normally where you have a nexus, which is where you have a physical presence of some kind in the US. We'll look at a few examples of what can create nexus, but these are probably some of the main ones. But having offices, having warehouses, having employees, they will normally be the main areas that states will consider you having a presence in that state. If you store inventory, so if you have them in your own warehouse, or if you use Amazon's fulfillment centers, that can create obligations in those states. Licensing software, if you have traveling salespeople, if they go in and out of states on business 2 or 3 times a year, that can create a nexus, as can attending trade shows. And these definitions of a nexus vary state by state, so each state can decide to change what defines nexus, and they're constantly looking at ways for new ways to tax companies. So just how complex is sales tax? There's a few examples here. So, not only do you need to know where you have obligations, but you also need to know the taxability of the items that you're selling. So, New York is an example. Bicycle gloves are taxable, gardening gloves are not taxable. It doesn't really make sense. Walking boots are taxable, hiking boots are not. So what you'd need to do is go through your product catalog, make sure that the products you're selling are mapped to the right tax codes in an area, and then you will, the right sales tax will apply. So this map here, this patchwork that you just saw there, is all the different 12,000 jurisdictions. And we're just going to drill into one area there, which is Boulder in Colorado. And it just kind of shows you just the next level of complexity, which is how all these different jurisdictions can have different rates and rules. So you've got one property there, which is number 7450 Leyden Street. It's got a 9.25% rate of sales tax. The house next door has got a 4.75% rate of sales tax. So you've got to know where you've got obligations. You've got to know the taxability of your items. You also need to know the addresses of where items are being shipped from and where they're being shipped to. And the reason this is all got as complex as it has is because, because of all these different jurisdictions, local mayors have decided that certain members of their family or certain businesses should be in their jurisdiction. So over time, it's just become incredibly complex. The other area is if you sell B2B, so exempt customers. So if you sell to schools, if you sell to universities, medical establishments, hospitals, these are entities which typically don't pay sales tax. So they're going to give you exemption certificates or resale certificates. And you need to be able to associate those with your transactions and make sure that they match up if you're ever audited. And why should you bother? What's the point? Well, really, it's all about audit. Sales tax is a huge source of revenue to the states. It used to be income tax back in the day. It used to be property taxes, all sorts of things. Now it's sales tax. It's easy to administer. It's easy for states to get hold of that tax. So individuals are the ones that will typically be paying the sales tax, and the companies will be the ones remitting it to the government. So a few areas to think about are, there's states are they're hiring more auditors. They're increasingly finding ways, like Amazon at the moment, to try and find sellers or find that lost revenue. An audit itself can be pricey. It can be expensive. You're gonna spend a bit of time with an auditor who's going to be going through your records for, God knows, 7 years, and it can take time. If you're thinking of selling your business at any point, you need to think about the liabilities that your company may have accrued, because that can affect your valuation. And there's also penalties. So as well as the sales tax that you have owed, there's potentially penalties and interest on top of that as well. So a couple of things that you can think about. There's a few things that are in your control. There's a few things that are out of your control. But if you are registered for sales tax in the US, as long as you're filing your sales tax on time, you're not going to go onto many auditors' radar. It's only once you're late, consistently late, you'll start being flagged up. You need to file the correct returns. You need to make sure that the deductions that you're making are consistent with your business. If you request refunds, that's going to be a flag. And if you've ever been audited, then they'll obviously come back and make sure things are correct the following years as well. But there's a few things that are outside of your control. So there can be random audits. There can be, different taxing authorities are starting to work together and collaborate. So, you could be found out through that. There could be referrals. There could be competitors. There could be an ex-spouse who wants to get their own back. There's all sorts of reasons why audits can happen that you have no real control over. So this is really kind of what I wanted to leave you with. There's only a couple of slides here, but if you are in the US, if you are thinking about going to the US, and this is really a kind of I'm using the US as an example, but it could be any country. But as well as getting your website done, as well as looking at payment options, as well as looking at fulfillment, tax compliance is an area you need to think about. So first of all, you need to work out where you have obligations. Where do you have nexus? Where's your physical presence? You need to get registered for sales tax in those states. You then, I can't read that down there, I'm going to have to read it up here. You then have to research the taxability of your items, so work out what the, are they bicycle gloves versus gardening gloves? You need to make sure that whatever rates you've identified are then plugged into whatever system you use. And you'd also need to ensure that those are checked on a regular basis, because these rates and rules can change on a monthly basis in the US. And then finally, you need to file on time to make sure that you are filing the correct form to the right state and paying the right amount the right way. So there's different ways of doing that. So that's probably the cheat sheet. That's what you'd need to do. Or you can do what a lot of companies do, which is look to automate things. So this is kind of what we do. We take that pain away, Avalara. We have teams of people who can help companies understand where they have obligations. We can help them get registered in whichever states or countries they need. We have the technology that can plug into their systems to then calculate the right rates. And we can also take that data and file tax returns in whichever country as well. So a couple of things that I think I'll leave you with that may be of interest would be, if you ever have any issues or questions about where you have nexus, where you have obligations, we can do something called a nexus study. We can take a look at your business in detail. We can take you through a detailed questionnaire. We can then give you, with certainty, state by state, where you have obligations and what you need to do. Based on that, if you have any historical requirements to deal with tax, we can help you file those historically. We can do voluntary disclosures, whatever. And then secondly, Avatax. So this is our software. So this kind of diagram sums up in a neat way how it all works. So Avatax is the tax engine in the middle. What it does is it connects to whichever platforms you're using. So if you're using Magento, if you're using Salesforce, if you're using Xero or Navision or Oracle, whichever systems have transactions in, there'll be an API call to us with the ship to, the ship from address, the product information. We'll verify those addresses, make sure they're validated, and then we'll give you the exact breakdown of taxes that apply. Cert Capture is our tool for managing exemption certificates. So if you're selling B2B, that's something to think about. And then that same piece of software can then extract that data, pre-populate whichever tax forms need to be filled out, and then send that off to the relevant authorities. That's kind of in a nutshell what Avatax does. That's all I wanted to leave you with today. I know it's probably not the most exciting topic for the end of the day, but I hope that was useful. If there's any questions, I'll be glad to answer them, or come and join me and have a drink.